Let's speak now with Shreyans Surana. He's Managing Director at Style Bazaar. Recently listed company. We were interested, Mr. Surana, to speak with you because as we're covering what happens with festive demand and the first signs perhaps of festive demand coming in, something that the economy really needs now, the market really needs now, was keen to know your view. And of course, Bazaar Style Retail, listed recently, like I said, it's a fashion retailer operating in West Bengal and Odisha, truly in the midst of the festive season right now, these areas. What is the sense that you're getting? Are you seeing robust demand coming in or a little weaker compared to last year?
No, the demand has been very good for us. For Q2, we have grown by 65% from 188 crores of revenue last quarter. Last year, we had done 311 crores in Q2. So 65% has been the growth and 41% has been the L12 growth for Q2. So the demand has been very good and there are a lot of traction coming from unorganized market to the organized market where we are present.
Your same store sales growth have also stood at 41% in Q2. Now, I'm trying to understand that these numbers that you've given out as your business updates, are these outliers? Is this because of a low base, or is this the kind of pace of growth that you're expecting to come in as well?
No, basically, there's a shift of 10 days of festive also in this. Last year, the Durga Puja was in October 23rd, and they said it is on 13th of October. So 10-day shift of that Puja festive is also there in this particular growth. But yeah, the demand looks very good because if you see for the entire half yearly also, so we have grown at a rate of 41%, and in terms of same store sales growth is around 21%. And the guidance for the entire year would be to grow at around 9 to 10% for same sales growth.
Okay. So your guidance continues to be at this level. You've opened 7 new stores since listing. How many stores would you be opening in this calendar year or in this financial year actually?
So for the entire financial year, our target is to open anything between 35 to 40 stores, out of which we have already opened 25 for this year.
Okay.
Shreyans, hi, good morning, Neeraj here. How do you see the rest of the year volume growth to be like? Because we are hearing mixed commentary for post the festive season. So part one is festive season, part one is post the festive season. Then I'd like to come to margins too, but can I just bifurcate the sales between the growth that you might see in the festive season and for beyond that, please?
So if I say now, for example, in Q1, we have grown at a rate of 21%. Whereas in Q2 we have grown at a 65%, and Q2 had a little bit of festive on that side. The reason that we are growing is that because we are serving to the 90% of the target, you can say masses around India, and our price segment is very good, and I think that is the reason that there is a huge traction coming from unorganized to the organized. So we are growing on that way, and as I said, for the entire financial year, our guidance would be to grow at 25% in terms of revenue growth.
Okay, 25% revenue growth for the year. And I'm guessing it's difficult to forecast what will happen in FY26, right? For now, you're probably looking at only FY25, or is there some number that you are looking at for FY26 as well?
So as of now for FY25 only, but the intent would be grow at this rate only for the next financial year also.
Next financial year also. Okay, fine. Based on the expansions that you have. Now tell us, I mean, as new stores come in, and you are majorly in the East market, but as new stores come in, and because operating at full utilizations, if you will, might be difficult at the onset, would EBITDA margin performances take a bit of a hit as you expand meaningfully? Or do you think you'll be able to maintain or improve margins even as you continue with the pace of growth on the store opening front?
I think we'll be able to maintain and grow because of the fact that we are opening in a cluster-based approach, where we already have experience of opening stores into a particular cluster. So that gives us an advantage. For example, we've got 72 stores in Bengal, and if I open any further stores in Bengal, I know the catchment, I know the products that are going to be sold in the catchment, I know the entire consumer section, who is our customer. So I think the mix of all the things helps me to create that assortment, and as a result, I'm able to generate that sales and EBITDA.
Okay, the other question is, while you are opening up at the pace which you are, and good luck to you, of course, on all of that, but competition is doing the same, right? I presume that formats like Zudio or U-Turn, etc. are your competition. Am I right?
Correct.
They are. Okay. So my question to you is, they are also opening at a good pace, maybe not in the same pace in the eastern market as you are, but they are also coming out there. So with all of this competition coming in, how do you intend to hold out against that, part one? And would your price points be materially different or lower than competition? Because we learned that Zudio any which ways is competing against other peers on the price point front. So how are you competing against these national chains which are arguably larger?
So in terms of national channels, so there is a one basic difference between both of us. First thing is the product assortment. So their target audience is majorly festive Gen Z, and they are into day-to-day wear, where we are a family shopping store where we have got everything. So for just example, the names that you have told doesn't have any ethnic section in their stores right now. They don't have a kids section in their stores, and our assortment is almost 60 to 70% different. Apart from that, there are lots of places where we both coexist, and even they are doing good, and even we are doing good in the high streets. And in terms of price point, our price points are one notch lower than theirs.
Okay, okay, so your price points are lower than that, and you will expand at the pace that you're saying and still be able to maintain or improve margins as well.
Correct.
Okay, and I presume that, one last question really, I presume that the capital raise that you've done is enough for you for the next 12 odd months, or do you reckon that because of the pace of opening that you have, you might hit the markets at some point of time in the next 12 months again? Not really, right?
No. We would not require it.
Okay, okay. Okay, so that's on this thing. Okay, but the other question, if you will, would be what are the newer categories that might open up in the times to come, right? For example, the classic case that everybody touts is what Zudio is doing or what Trent is doing. So Trent got out Zudio, now it's also getting into lab-grown diamonds, for example, to compete against the existing high-priced diamond category. Do you believe you are unearthing or moving on some product categories which might not be usually seen thus far in the format that you are present in?
Not really, because I think there's a lot of scope, because we are operating in tier 2, tier 3, tier 4 cities where there's a very less organized penetration. And I think the focus will be to grow this model itself, because I think there's a lot of, as I said, there's a lot of potential in a lot of cities in India, and we will be continuing to focus on this model itself as of now.
Okay, as of now. So nothing on the annual as far as that goes. My final question, because of the cities that you're opening in and the rentals that you might be getting therefore, because tier 3, tier 4, I believe availability of real estate as well as rentals would be cheaper. Could you believe that over the next 2 or 3 years, there is a high chance that you might be able to improve your margins even more relative to competition?
Yeah, I think so. As you rightly said, because we are in tier 2, tier 3, there are lots of expenditures which are very low. And apart from that, as we are following the cluster base, it also helps us to optimize our expenditure, because opening a store into particular zone help us to optimize costs on all the fronts, on marketing front, on the warehouse expenses, and there are a lot of other expenses. So I think as we grow further, we will be able to improve the margins over there.
All right, thank you so much for that. Shreyans Surana there, Managing Director at Style Bazaar. You know, as we start covering the festive season, a lot of points over there to look at decently.